We are recording this for the purpose of we have a YouTube channel, sir. So, so that I will members can know and the proceeding with question from all the three law firms. Yes, sir. So the first can we start? Yeah. So, good afternoon and warm welcome to the representatives of law firms and senior bankers who are present in person in IBA, as well as bankers and the law firm officials who are here in the BC with us. So this has been the practice that the important issues in the banking industry, we arrange seminars, webinars for the benefit of the member banks. And this DPDP Act, Digital Personal Data Protection Act, this is very important development in the ecosystem. And given the, I should not mention that the amounts of penalties, I will draw the attention of all the bankers as well as a law firm. And since there is some time available for implementation of these rules, we thought it's the right time. We organize some kind of webinar and seminars so that there is a share of information, knowledge, effective implementation of the guidelines of the Government of India. So, in addition to bankers, we have got today representative from three law firms. One is CAM, CAM. Yeah. These people are here. Welcome to the representatives of CAM. We also have presentation by EY and welcome to them also, and EY team for this presentation. And we also have Legality, the law firm. They are also here, some people, and from our the VC also to give presentation over here. This is the platform where we will be first getting presentation. Thereafter, there is a facility available, sir, on the VC. You can write their queries if you want some questions. And at the end of each session, there will be 3 sessions. At the end of each session, these questions can be answered subject to the time constraint we have got. So from 2:45 p.m. onwards, or as after the initial address of the Chief Executive, we start it, and this presentation will be by CAM. This will be for up to 3:30. So presentation and Q&A will go subject to the questions as well as time constraint. And thereafter, from 3:30 onwards to 4:10, and thereafter legality. So this is the program for today's webinar. Once again, warm welcome to all of you. And, of course, we might be able to hear queries from the participants on VC, but they can write their queries in the chat box there. This will be taken up for discussion. We also have permission from the law firms to record this presentation and Q&A so that this can be uploaded in the YouTube channel subsequently for the benefit of entire industry. So we have representatives from banks, public sector banks, sector, foreign banks, cooperative, RRBs. We have invited all the banks today for this webinar. With this, I will now request our Chief Executive, Shri Atul Kumar Goelji, for his initial address. Thereafter, we start the webinar. Over to you, sir.
Thank you very much, Bhagatji. Good afternoon to everybody. I welcome all the persons from the law firms also. We will be the main person for the today's discussion also, as well as all the other banker fraternity also. Public sector bank, private sector bank, even the cooperative bank, small finance bank is also there. Because we are the member of all type of the bank, whether to go foreign, etc. also. And Bhagatji has told this is the practice of the annual of the IB also. Any topic which is impacting the banks as well as the financial institution, we are arranging such type of the seminars to update the knowledge of banker fraternity also, and what is the impact also, like the labor code also. Recently we have done this seminar presented by each and everybody. I once again welcome to all the other knowledge partner legal firms as well as all the banking professionals also. As I was telling, it is the practice of it is the endeavor of the IBA, whatever the new topic on any issue which is impacting the banking as well as the financial institution. Such type of the seminar, and even we are connected with the government as well as the regulator for the digital personal data protection. We were engaged with the Ministry of the Electronic and the Information Technology before the guidance was issued. So we were also connected, and whatever the suggestion from the all the banking sector, we have the working group. So we have also submitted our suggestion also before the act was. So was coming to force in the August 2023, and rules has also been November 2020, 25, November 25. And I think it is the time limit for the implementation of this has been given to 18 months. So I think we have already passed 3 months. So still we are having the 15 months. This is the purpose also. What is the requirement for the implementation of the such type of the act? And the knowledge partner which I told you, the Bhagat already doing the CAM and the legal team of all, they are need no introduction. They are very renowned from this point of view. Some of the points which I was just seeing the DPP Act, the core principle and the scope also, it was the Saral design. Saral means the simple accessibility, versatile and the actionability approach to ensure the ease of the understanding and the compliance. The applicability, this is applicable to all the digital information of the individual in the India also, even the extra territorial reach if you are providing the service in India also, but the data is also that is also applicable to this. The data principle and the fiduciary, the individual and the data fiduciary, the company and the organization which they are using the data. The most important for this is the data. You have to get the consent from the individual, etc. Also, that without the consent, you cannot use the data, and the which type of the purpose of the data. Where you are using the specific permission is also required in the DPDP Act. And the purpose is data limited as only specific purpose and data retention. Data must be deleted when the purpose is being fulfilled, and the rules requires the retention of the log for the at least 1 year, and for the large paid for automatic ensure the activity also. The mandatory breach reporting, if the breach of the data, if somebody has not given the consent and data has been used, I think the 72 hours you have to report your grievances to this data protection board of the India within 72 hours, and they will take the necessary action. I will come later on the penalty part also. And single data fiduciary also. That is also, as I told you, the key right, if you see the key right on the individual data principles, the assets and the correction, individual can request for the summary of the data also, as well as the correction of the grievances. As I told you, the 72 hours in 90 days time is the to complete the respond the user's request also. The nomination also is required, because after the death of the person who has given the data and you are using the data, so they can give the nomination. It is a very good thing. They can nominate the person. After the death of the person, the data will be there. That is also the consent manager that I have just told you, even for the minor also. If the data is related to the minor also, then parent say parent has to give the consent for the data of the minor also. And this is prohibited activity में bench behavior than the minors का you can't do the bench for the behavior policy tracking or the target achievement. Penalty is Bhagat has also told 250 crore rupees the penalty for the breach, and the 200 for the minor sector also. That is 200, and the compensation is not available. The person whose data has been used, penalty on the user, but no compensation, I think, to available to the person whose data has been. They from the mechanism only they can report this. So implementation for the, I told you, 18 months has been given from the effective of the rules also. So that was in the November 20. So already 3 months has already been passed, and then remaining 15 months, I think we will be in a position to evaluate how to make use of this. And main thing, once again, at the cost of the repeated also, because why it is important, because we have never heard the penalty of the just like a 250 crore for breach, and so from that point of view, If you don't have the knowledge and you are using the data, why, whether ignorance or non-ignorance, etc., also the penalties have it. So we will validate, and Bhagat ji have also told there will be 3 presentations, and we will give the opportunity through the writing, etc. Also, the whatever we query it, I can answer one more thing also. If we are not in a position to take all the questions today also, so whatever the feedback we will receive from the, so we will be in a position to get the feedback from our the partner, the CAM, etc., the ENY, etc. So I think the CAM will give the legal framework, and I think ENY will give the how to implement. This one, once again, I welcome.
Recording, yes. I think position is better now, so we'll start. Thank you. Please.
Thanks. So we were on the page where we were just looking at the core DPDP obligations. We were on the point of being liable for your data processors. You also have to employ reasonable security safeguards and report personal data breaches. There are, of course, additional obligations if you are significant data fiduciaries. So this being said, we will now go to selected issues, legal issues in implementation and views that one can take in relation to such issues. The first issue we want to sort of put before you is the one of basis of processing. A lot of understanding about the DPDP Act is based on the understanding that you can process personal data only pursuant to consent or sometimes pursuant to legitimate use. However, the truth for a regulated entity such as a bank is that there are many other bases of processing other than just consent and legitimate use. There are exclusions, there are limited exemptions, and there are complete exemptions. And this point is very important for designing both your privacy notice and the consent that you take, which we can just move on to the next slide. It's important to understand where you need to take consent and whether you need to take consent for items that you don't actually need to take consent, right? Under the DPDP Act, there are actually additional obligations that come to you if you take consent for processing of personal data, or rather obligations that only apply to you when you process data pursuant to consent. The biggest two examples and two of the biggest obligations on data fiduciaries under Section 11, which is data summary, which is one of the most onerous obligations on banks, and Section 12, correction and erasure, and to a certain extent, the withdrawal of consent under 8.7 only really apply to data that is processed pursuant to consent, or in the case of sections 10 and 11 under legitimate use under 7A, when the data principal has voluntarily given you the data, right? But there are still massive parts of data that you're processing which does not need either consent nor does it actually fall within 7A legitimate use, right? The best example I can give you, and the largest swath of data that you process without consent, is KYC data, which as a bank you will process under section 17(1)(c) of the DPDP Act, which allows for processing data without consent and without complying with any of the obligations under the DPDP Act other than reasonable security safeguards and being responsible for your data processor, because all KYC processing is ultimately under the Prevention of Money Laundering Act, and 17(1)(c) covers processing for purposes relating to prevention, detection, investigation of any offense, right? So all KYC data is actually exempted from consent, and one should ideally realize this and design your privacy notice and your consent in a two-tiered manner, right? Please remember, you only need to take consent where you need to take consent. Where you do not need to take consent, if you take that consent, then there are additional obligations under 11 and 12 that become applicable to you with respect to that data. So what we have been advising most of our clients is to have a two-tiered privacy notice in terms of setting out a part A, which is purposes and personal data that you process pursuant to consent, and setting out the purposes of processing where the DPDP Act allows you to process it without consent in a part B. I'm just calling it part A and part B. And when you take the affirmative consent from the data principle, do try to take consent for the purposes set out and the data set out in part A, which is the data you absolutely need to process under consent only. And then you take an acknowledgement of the fact that you will process the data under part B without consent, which is allowed under the DPDP Act. So it's a question of whether you need to take more consent than you actually need to do. And as conservative bankers, we all normally just go and take consent, right? But in this case, do consider that there are additional implications of taking consent where you don't actually need to take consent. It might be better to just get an acknowledgement of those situations where you are actually processing data without consent, where you are allowed by the DPDP Act to process data without consent. I just gave the example of KYC, but there are other such examples. One of the biggest concerns or items that all our clients have spoken to us about, and which is also a big part of the UI, UX, and the data principle interaction itself, is on whether consent needs to be itemized or whether it can be bundled. As per the reading of the Act, while purposes and the list of personal data elements must be itemized, there is technically no requirement to have itemized consent. It is a matter of choice for the individual bank whether they want to bundle their consent or whether they want to unbundle their consent, or in the case of some of our clients who have chosen to bundle consent but allow withdrawal in a unbundled manner, right? So the law probably allows bundled consent, but it is also up to you whether you want to make a choice, for example, whether you want to allow your data principles to opt out of, let's say, marketing or cross-selling, right? It is also a choice that you have to make from your perspective of how easy you want it to be. The point, however, is that if you choose a particular ease in giving the consent, then you have to allow the withdrawal of consent with that same ease. So even when you choose to do a sort of a hybrid approach where you take a single tick or a single consent at the time of taking the consent, at the time of withdrawal, you can start with a single tick, but give options to unbundle and say, hey, I want to only withdraw my consent for, let's say, cross-selling or marketing. I don't want to withdraw my consent for the services that you're providing. So that's a choice. Our advice is that bundle consent is certainly allowed by the Act and the rules. It's a design choice, and it's a legal and risk choice also that you need to make as to how bundled or how itemized you want your consent to be.
Can we ask questions right now or later?
I think we'll just finish the presentation and then we'll. Yeah. Of course, everyone understands that there are operational challenges in unbundling consent, but again, that's a UI UX choice as well.
Back on your service point, which you said, service, because service, then what is the way of, so I'll park my question.
Sure. Moving on. The other sort of big question we are getting from clients is there's a chicken and egg situation sort of in the DPDP Act, right? That in many scenarios, it is the bank that reaches out to the data principal to offer something, while the DPDP Act requires you to have consent prior to processing personal data. Now, you can't reach out to someone without processing their personal data. So how do you go about this? I mean, it's sort of what comes first, the chicken or the egg? How do you get consent from a individual you haven't yet interacted with, right? our advice always has been that please rely on Section 7A consent, which is actually legitimate use, where the data principal is voluntarily providing the data and has not indicated that you should not reach out to them for that purpose. So to give an illustration, if you have a DSA or a DMA or a channel partner who's generating leads to you, based on which you're reaching out to the data principal, please ensure that you have seen that that person has at least taken consent to share that data principal's personal data with you, and for you reaching out to provide your services. Now, obviously, if upon reaching out, the data principal says, no, I'm not okay with you reaching out, then 7A falls down, because if the data principal indicates otherwise, then you will not be able to continue that processing. So if at any point the data principal that you've reached out to says, no, I do not want you to reach out to me, you will have to stop that data processing and purge that data. But this is the solution to the chicken and egg issue of data principal contactability, and how do you get consent prior to actually reaching out to the data principal. Moving on, there'll obviously be changes to your own onboarding journeys. The DPDP rules, as you know, requires the privacy notice to be provided separately from any other information that is provided to the data principal. Therefore, the question of including this as part of your application form, onboarding form, loan agreement, terms and conditions, etc., does not occur. You have to separately provide that notice. How do you separately provide that notice? Obviously, you could provide it in terms of a physical form if your onboarding set is physical, and then digitize that consent later at your own end. We don't know how the consent management ecosystem will work out, but if things go well, ideally you should also be able to take that consent separately and provide that privacy notice separately through a consent manager application that the data principal may have. But obviously, not every data principal may have a phone or may have the ability to have that consent manager application. So you may have to think of a physical mode as well to collect that consent. As I said, it has to be understandable independently, and you have to be able to provide that notice in any of the 22 languages in the relevant schedule of the Constitution that the data principal wants to do it. Everything is in favor of providing it digitally, but there are so many situations where it is not possible to provide it digitally, and then in those cases you may have to provide it as a separate part of your onboarding set. It can't be the same document, it has to be a separate document. Moving on. So the big implications are the ones on the screen today. I'm not, as a lawyer, going to take up issues of rewiring of digital infrastructure for meeting the consent management, etc., which you have PwC speaking after me, though they are EY speaking after me. They are much more qualified to speak on those issues. I will speak on the and again on the uncertainty around consent manager ecosystem. Also, it's not really a legal issue, so I'm not taking that up. But the rest of them, which are legal concerns, we will just sort of go through in a brief manner. The first one is consent for stock personal data. If you can move to the next slide, please. So as per section 5.2, where you already have consent within your system for processing, you are not required to take the consent again, right? If you read the drafting very technically, there is no separate treatment of consent under 5.2 versus 5.1. And if you go by the definition of consent, then it is consent under the DPDP Act. But obviously, such a such an interpretation is honestly meaningless, because the DPDP Act did not exist at the point when you were possibly taking data to. So to expect that consent under 5.2 should meet the standards of consent under the DPDP Act, we don't think is the reasonable interpretation of 5.2. However, in our experience, we have also seen that it is not every bank that has actually currently taken written consent, either linked to their SPDI rules, privacy policy that is out there, or in some cases, banks have taken consent very piecemeal. So you may have a consent taken along with a liabilities account opening form that only applies to liabilities, but it doesn't apply to assets. Some banks have very comprehensive written and positive consents already in place, and they're not finding it difficult to just send the notice under 5.2 and say that consent is there. But where current consent is either deemed where it is not positive, or where it is piecemeal, then there are concerns on whether you really have consent under 5.2, and this should ideally be one of the core items that you check during your data mapping or data inventarization exercise, whether consent actually exists today for processing the data that is there. Moving on to the next slide, please. Banks have hard case data principles. Banks have data principles where it is practically impossible or will change entire banking practice if we have to go and take consent for them, right? The best examples, as we keep seeing, are nominees or payees, right? Now, nominees are nominees' personal data you are bound by law to collect. However, there is no specific exemption for nominees. Technically, if you read the Act, if you read it in its full conservative meaning, then you may have to go and insist that nominees also give you consent to keep their data, personal data, with you. That, however, will completely change banking practice. It will also change the whole point of nomination, in the sense that in some cases it is very important that a nomination remains confidential for the customer who wants to keep that nominee confidential. But if you have to take their consent, then it cannot remain confidential. Similarly, pretty much every bank today allows their customers to include the bank account details and names, etc., of their frequent payees in their in their mobile applications and internet applications. Now, those payees will not always be from the same bank. They will be in a different bank. If you are storing these details within your system, and it's very common, how would you reach out to those payees and take their consent for your bank to continue processing that data? We have some half-baked solutions. I wouldn't myself say that the solutions available within the Act today are perfect and they sort of cover all of us. Our recommendation is that banks, along with other financial services players, all of whom have these nominee type issues, right? Like a lot of mutual funds have nominee issues, insurers have nominee issues. It should be taken up with MeitY for exemption notification under 17.5. Ideally, you should get clarity clearly under the law that these data principles, that you don't really have a way of reaching out to without taking further personal data from them, or without completely upsetting existing processes in relation to things like nomination, requiring your customer to sort of take the consent of every payee before inputting payee's details in your internet banking application. It is just an impossible task.
UPI payment.
Or UPI payment. Yes, these are all impossible tasks. And, the best solution we will suggest to you is lobby for a 17.5 exemption. the financial services industry really requires it. And these are not cases where there is even a real intention to misuse this data. It is not that banks are today sending cross-sell or marketing mails to nominees or payees. There is no real harm that is being done. There is a good case for an exemption, and our advice is that we should either as the banking industry or in a wider coordination with the financial services industry, take it up for an exemption. If we don't get an exemption, there are some solutions. As I said, they're not the best. For example, for a nominee, you could argue that you could take a consent from the or a representation from the account holder to say that the personal data is being provided with, I mean, with the consent of the nominee, or they have been informed about their nomination and the fact that their data is being provided to the bank for that purpose, and then live under 7A. Not the best. It's a logical jump. You could also try arguing that it is excluded processing under Section 3, that a nomination is ultimately a personal or a domestic purpose, while it is not a personal or a domestic purpose for the bank, but it is still a personal or a domestic purpose for the individual whose nominee or payee it is. Again, I am not saying that these are perfect solutions. The perfect solution is an exemption here. There are many other such cases. We will come to one of them when we look at direct assignments, securitizations, portfolio sales, etc. Moving on to the next slide, please. Referral and cross-selling, again, lots of issues around this chicken and egg thing of how do I get consent before I reach out? How do I know that the person who my channel partner is referring to me is okay with me reaching out, etc. The clients that we are advising are mostly coming down to an answer of Section 7A. We are going to assume it's voluntarily provided till we reach out and find out that they are not okay with it, right? Which is the other part is, your channel partner's consent must certainly be checked to see whether there is a clear, clear provision for you to be given that data and for you to reach out to offer your goods or services. Of course, where you're purely collecting it through a data processor, you would have to take it on your own, consent if it is consent-based processing, or it can be purely voluntarily. It can be a walk-in, then that is perfectly fine. It fits under 7A. When it's another data fiduciary, you will have to verify their consent to know that at least you have an answer under 7A for the initial reach out itself. Moving on. Portfolio sale transactions are going to be badly affected. In India, mostly the standard asset market works on a originator acting as a servicer model, in the sense that the underlying loan borrower does not know that the loan has either been assigned to another bank or NBFC or has been securitized to a securitization trust. The market works on the understanding that it is blind to the underlying borrower. However, if DPDP Act comes in, and if tomorrow the transferee bank or the investee bank is required to reach out to the underlying borrower in a transferred portfolio to take their consent, the one thing that will happen is that the underlying borrower will now know that the exposure has been sold to another bank. So tomorrow, in case of a default, when a 13(2) notice is sent by the servicer, the underlying borrower knows that the person sending the 13(2) notice is actually not the secured creditor. And in the case of a securitization trust, may not even be capable of being a surfacey secure creditor. So those sort of issues arise if you have to take consent. Then this market will have to stop being blind to the underlying borrower, which is a massive change. Again, we have certain solutions there, assuming that you only keep the personal data of such subsequently acquired loan customers through a DA or a securitization only for the purposes of KYC or only for the purposes of keeping your records so that you can enforce your rights tomorrow. There are certain exemptions that you can live under, but please note that for such borrowers, for example, you will not be able to do cross-sell or market your other products, right? Because the exemptions don't cover that. For that sort of activity with these sort of data principles, you would have to reach out and take positive consent. There is a way of relying on 7A and 17(1)A to sort of remain blind even now, but it's only if you process that data only for continuing with the loan on your book and for no other purpose. This is another major thing. We will have to see whether the industry moves to a blind, non-blind situation. Our guess is that it will be too much of a revolutionary move to a non-blind situation. But this is clearly something that every bank is facing, and again, would be useful if there could be a exemption. But the rationale for exemption here is low, right? Because ultimately these are borrowers on our own books, and we have the ability to, or we choose what to do with that data. We may be reporting those to credit bureaus. We are clearly data fiduciaries. So it's unlikely that an exemption on these sort of things will come, unlike a nominee or a payee, where there are logics to say that, I can't even take that permission. I don't even know how to reach out to that person. Moving on. So obviously you guys would all be taking the steps and preparing. That's sort of a quick look at all the selected issues. I think I will stop here and take up the many questions that the folks here had and the ones in the...
So, Chirag Jain from HDFC Bank. A couple of questions I have. First, as a data fiduciary, when we take the data of the data principal for KYC, for a savings account opening or a current account opening, the purpose is defined that I will be operating and using the data for enabling a transactional account. But across the banking industry, once a account holder is doing transactions with me, then I roll out, or banks roll out a pre-approved business loan. Understanding is and cash needs or working capital needs. Now, this purpose, where the data is processed for underwriting and then a pre-approved offer is rolled out to the customer, is different from the purpose of this data was originally taken. But it is a very standard practice and actually meets the unmet need of the customer, especially SME segment. So, what are the is there any exemption towards that, or what is the reason that?
No, you will have to take consent.
So the consent has to be then bundled, that the KYC when I am doing, that
the consent need not be bundled, okay? And it is not just KYC data that you may use for reaching out, right? For you to do marketing, there's hardly any exemption there. You have to take that consent. Even for a liabilities customer, you will have to say that one of the purposes for which we will process your data is evaluating you for our other services and reaching out to you to provide these services. You have to take that consent. There is no way you can work with a product-based consent only based on how banks in India today work, and as you rightly said, leverage information that has been taken in one department for offering another department's product. So you cannot continue to have product-specific consents. You need to have one bank-wide consent.
regarding this port. I'm Paresh from Bank of Baroda.
Can you just take the mic closer?
I'm Paresh from Bank of Baroda. So regarding this portfolio, now when bank purchase the portfolio, the individual customer account is created. So the NBFC or the bank, other entity who is selling the portfolio to us, they have to provide all the KYC document to open that customer ID and account over here. So now it is not like a blind structure. So that the who is selling the portfolio, they have to give a clear notice to the customer that their portfolio, that loan is being parked with the particular bank.
Sir,
So
look,
it's not a
if you
blind.
if you're currently doing it on a non-blind basis, you
Yeah,
won't,
it's not a blind
you
now.
won't be affected that much.
Yeah.
From our discussions with our other client banks, apparently that is not the universal. This one, the client is the underlying borrower is often not aware of a securitization or a DA, especially when you are purchasing from an NBFC. Generally not there. People are relying on the general consent under the terms and conditions to assign. The other issue is that even if it is disclosed, it doesn't end there, right? You have to then reach out with your like privacy notice and take the consent. And now when the originating bank or NBFC is originating, they don't know which bank they will be doing the DA to, right? Because that decision may be taken at a later stage, right? At that point, so obviously they can't give, today I don't know if I am X bank. Today I don't know that after MHP period I will be selling to Y bank, right? So at the initiation stage, I can't take Y bank's privacy notice and say, give me consent. But when Y bank now gets the data, Y bank needs a consent based on Y bank's privacy notice.
But sir, the thing is here, in other way around, we become like a data processor. We'll be financing the part of the loan.
No, sir, you will not be a data processor. You have independent obligations, for example, to report to credit bureau. He is the underlying borrower, is your customer like any other loan customer, and you have the ability to decide what happens to that personal data. There is no way you are acting as a data processor. You are not acting on the instructions of the selling bank. In fact, that would be a violation of true sale, right? The whole point of true sale is that you have the ability to act independently with regard to that portfolio, independent of the originator. You cannot be taking originators. I mean, you're not an agent of the originator. You are your own person with your own right with what that data has to be done. For example, if there is a default, you have to report to a credit bureau, which you do as a data fiduciary.
I have to check with this then.
You can try, sir, but it's very difficult to argue that
because the whole responsibility lies on
borrower
the
on your
NBFC
book
selling the portfolio, sir.
No, sir, you are doing the processing of the personal data, sir.
Responsibility is something different. Because the customer, as only whatever is, customer is not aware. Because the indirect assignment,
Customer thinks that the originator is still servicing, right? The NACH mandate,
NBFC,
the NACH mandate is still in the name of the NBFC.
This is the reason sometimes it is substandard in your book, then standard in their books also because.
Sir, previously it was there like this, but now the entire, if I am sharing the portfolio with 80-20, then 80% amount, 80% which I am financing, that customer's account I am opening. Whenever the NBFC receive the fund, he part the 80% of the receipt to us and 20%.
But sir, does the underlying borrower know? For example, today when you take,
they are not aware as on date.
If when you take a surface action today,
so now,
who does the surface action, sir? Originator or you?
Originator.
Why? If the underlying borrower knows it is you, why is the originator taking action?
Challenge is there. Basically, what is the responsibility of the bank?
Entire recovery action is there. See, why today you can actually change the NACH mandate at NPCI's end. I don't know whether you do it, but till a couple of years ago, you couldn't even change the NACH mandate from the back end without the borrower knowing. So even the collection was fully happening. To some extent, it is even the actual NACH collection may also still be happening with the originator. And the originator is the person who completely interacts with the borrower you don't assign a relationship manager to that borrower. You don't actually, I mean, you may assign, but you don't communicate that to the borrower saying, this is your loan account number with my bank, this is your branch, this is your relationship manager. That, at least in the banks that I am assisting with DPDP, I don't think that is happening today.
Achha, one more thing, suppose the NBFC is selling the loan portfolio to the banks also. Suppose the act is implemented and they have taken the permission also from the customers. Suppose they have taken a consent from the customer also to sell their portfolio, etc. So what is the responsibility of the bank?
So
Whether
as
they
long
should,
as
they should ask to the show me the consent also whether you are
Oh, absolutely, sir. That to today also we are anyway checking, right? The purchasing bank will anyway check the free assignability of the loan itself. And based on that free assignability, you will take it under 7A in the assumption that the underlying borrower has agreed to the assignment of this loan to other parties and hasn't indicated otherwise. Now, till then it is okay as long as you're only holding it for the purpose of KYC under 17(1)(c) or for the purpose of maintaining records so that you can enforce your legal rights under 17(1)(a), then it is non-consent based processing or consent exempted processing. To that extent, it is okay. However, if you want the ability to, let's say, market something to this type of customer, then you will not be able to.
That
challenges will be there.
So then,
एक तो my request to finally list out which the banking industry is doing. Where you are thinking that there will be really challenge, we should ask for the exception also.
that is this entire presentation.
That is very essential because
This is his entire presentation.
suppose I want to make this, suppose I want to make the payment to anybody. So I am storing the data. I am creating the beneficiary. When I am creating the beneficiary, I am creating I need the consent, etc. Also because I am not aware whether the bank will be used this data. I am creating for the payment purpose. They may be using for any other purpose, etc. Also
They cannot.
That is the main thing, na, consent, etc. And one more thing with what you are saying, KYC data is exempt.
Yes.
The use of the KYC data is exempt. So there is a difference between the KYC and the CKYC because as on date also, if we are using CKYC data of any customer, we are required to take the consent from the customer.
Sure, sir. That is from the RBI and PMLA perspective, right? But for you to process data for a KYC purpose under the DPDP Act, because all KYC processing ultimately flows from the Prevention of Money Laundering Act, right? All KYC processing is for the purpose of preventing, detecting, investigating offenses of money laundering, right? So to that extent, you don't need consent. You don't need to comply with all obligations under that chapter other than the obligation to maintain reasonable security safeguards and the obligation to be responsible for your data fiduciaries. And so KYC is one example. I can give you many other examples. The video, the CCTV in your ATMs is a great example of exempted processing because you are doing that to prevent crimes and have a record tomorrow if somebody has come and done a crime or withdrawn money, etc. So there are many such other examples where your processing is actually exempted.
But it is very difficult now because in DPDP Act, the KYC data can be used without consent. But whatever the bank is updating the KYC data by using the CKYC, whether whatever you are saying for the PMLA, as well consent is required because without the consent of the customer, only for updating the KYC.
That is true, sir.
Because we have to say this act, in this act it is allowed. But
that is true, sir. But you will understand it when I say that when somebody comes and tells you, please erase my data, right? You don't need to erase data even if they withdraw consent, if you are required by law to store that data. And KYC data clearly you are required by law to store. So KYC is very clearly outside the ambit of consent.
Sir, from KYC as a data sharing happens because in that case, data fiduciary is sell side. Sell side takes consent from the customer whether I can share your data with the bank or not.
Yeah.
Similar to UIDAI. Every time UIDAI asks customers consent to share their information with the financial institution.
Yeah. Sir, as per section 5, the biggest challenge for bankers,
Take the mic closer. Take this mic.
biggest challenge for the
We'll also need to look at the chat there.
okay, that see that
Yes,
There is a lot of
Given
about
what is-
sharing of this PPT.
Oh yeah, absolutely, sir.
That way.
You can share.
We will share the PPT also after the presentation.
Sir, I have a small question.
Yes.
Whether an employee can share his or her dependents' data with the employer without consent of.
Sir, if you look at the wording of 7E, there is an interpretation that you can take to say that indeed, or that it does not need to be the data of the data principal who is the employee, which can be processed under the legitimate exemption for employment purposes in 7I, right? And I will read the wording out to you. For the purposes of employment or those related to safeguarding the employer, etc., 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 or provision of any service or benefit sought by the data principal who is an employee, right? Now, it doesn't say processing of personal data of the data principal who is the employee, right? As long as you're processing the personal data for providing a service or benefit sought by a data principal who is an employee, you fall under 7I exemption, right? So today, if you are providing dependence data for an insurance cover, you could technically argue for your employee, you could technically argue that you are in legitimate use under 7I. Of course, we would recommend that it is better to move to a system where the employee now directly provides that data to the insurer rather than it flow to the bank. It is just additional data that you don't need to really process. It can flow directly through the bank, and even for claims processes, we would recommend that now you design your HR systems in such a way that it flows directly from the employee to the insurer. Then it's the insurer's headache really. You are not really a data fiduciary with respect to that data unless, of course, you are going to provide some other, let's say, if you're going to provide employees, families with club access, then yeah, there may not be, there may not be a way around it. But for group insurance and stuff like that, sir, maybe it might be a better this one to let the personal data itself flow directly and keep only aggregated anonymized data for the payment purpose.
So, wherever the employee is filling some data through HRMs, we will take explicit consent that this data may be used for this. And
Yes, sir, but you will take it from the employee, sir. What about the dependent? Will you take it from the dependent? Will the dependent come on HRMS and give it?
Like you mentioned for payees and nomination, this is also a case for dependents and the employee.
Yes, sir, but in this case, actually, there is an exemption in the Act, which is what I am saying. So you might actually be able to claim that there is an exemption already.
Next question for all embedded data. So question is like there could be a data wherein the data customer is providing data has given consent, but inside that data there is the personal data of other person. Like in statement, it can happen. You have already given example of payee. So I am talking about embedded data. When I am saying embedded data, data within data. Is there an exemption or clear demarcation on that?
No.
Because, for example,
No, there isn't.
that is not
There isn't. This is a very specific case of a personal data item that falls within a specific exemption. So I was mentioning that in response to a specific question of dependence data given. So it falls within an exemption, right? The data that you're talking about, it doesn't fall within any identified exemption, so no.
So wherever you are mentioning data, the Act speaks of PII, personal identifiable information.
That is
Not
all we are talking about. That is all we're talking. When I say data, I mean personal data, please. And I actually mean digital personal data, just to be.
Sir, it is service. There is provision privacy service. Serving of privacy notice is very difficult task for the banks. So serving is the deemed servicing or actual servicing is required because they have said they have prescribed mode of the
Actual.
sending.
There is nothing called deemed under this Act.
Okay.
Everything under this Act is actual. Act is also very clear that you cannot take consent before you have served the privacy notice. There is no doubt about that. And there is no consent here under 5. The consent that we are talking about, not legitimate use. The consent under this act can only be positive. It can never be deemed. It can never be an email sent saying if you don't respond to this consent.
So when banks do underwriting, they reject a
Please take the mic. Take the mic closer to you.
So when banks take a customer's data and they do an underwriting, during the processing of the data specific to the underwriting, they may reject the customer. Now, post rejection, the customer's data is still in the bank's record for two purposes. But the customer can go and complain a denial of service in which bank has to respond ombudsman channel or other channels on the reason, and for that to prove they need to furnish the data, and not only the PII data but the transactional data. Number two, the data which has been taken, and even post anonymization, there is a lot of transactional data which is required to train the underwriting models on an ongoing basis for back testing. So that data, which while the PII data has been masked, but the transactional data itself is of such nature where customer identity can be identified. How is that covered or exempted?
So when you mentioned customer in the first sentence, is it actually a customer or a prospective customer?
So it's a prospective customer who got rejected. So it's a.
That's what I'm asking. Is it an existing customer of, let's say, you use the word customer, right? Is it actually an existing customer of the bank for any product who is being considered for a loan, or is it an entirely new to bank prospective customer?
New to bank
Right?
customer.
The answer for both of these two are different, which is why I'm asking.
So new to bank customer who came and got rejected, but his data is still required in case I need to.
Why is this data required?
So denial of service, a customer may claim that I have been distinguished on the basis of my caste, gender, or anything, and post that I have to prove to the regulator that it is not basis his particular societal representation of any religious representation that customer got rejected, but purely on the basis of credit underwriting principles.
Sure, sir. So you include this as a purpose in your privacy notice. When you collected the data for credit underwriting, you would have taken the consent based on your privacy notice, right? So you include this as a purpose use case enabled in the privacy notice and take consent for it.
So basically, post rejection also, in case a prospective customer could not become a customer, still I have the right to store it.
As long as the person gave you that consent and the person doesn't come back to you and withdraw the consent.
Oh, in the case of prospective customer, also have to give that right of withdrawal.
Every data principle you have to give a right of principle. It doesn't matter whether it's a customer, prospective customer, employee, representative of a corporate customer, vendor's representative. It doesn't matter. Visitor to your branch, everyone's a data principle. Sorry, can we take up some of the questions in the chat bot? I think we've been ignoring them unless. Okay, that question from. Sorry, there was a question from, I think, Kotak, a little below, where they're asking, does this act apply to Indian citizens or does it or apply within Indian jurisdiction? So technically speaking, the act applies to processing of personal data in India. It does not actually matter whether the person is an Indian citizen or a foreign citizen. The act also applies to processing of personal data outside India, so long as it is in relation to the provision of goods and services to data principals located in India. Now this, if you interpret it the way it is written, this can result in some very strange this ones, right? So let us say you have a foreign branch that is giving an ECB to an Indian entity, and in the process of giving an ECB, that foreign branch takes the director's data or the authorized signatory's data for that Indian company, right? DPDP Act does not apply in that scenario because the service is being provided to an Indian corporate, not a data principal located in India. However, on the other hand, if your foreign branch was providing a service to an Indian resident under the LRS route outside India, right? You were, let's say, providing a stockbroking or a foreign bank account to an Indian resident in LRS. Because it is an individual that the foreign branch is providing a service to, it is a good or service provided to a person resident or a data principal in India. Therefore, the foreign branch will have to comply with DPDP. In terms of the India branch looking at or processing personal data of persons who are not in India, there is an exemption under section 17, which is commonly known as the offshoring exemption, where you're processing personal data of a person not present in India under a contract with a person resident outside India. There is an exemption under section 17. It gets really nuanced when it comes to NRIs. NRIs are not present in India for, let's say, 11 months a year or 10 months a year, but there are 1 to 2 months when that NRI is present in India. Does that change applicability? So for GDPR, for example, there is a clear targeting criterion. Unless you are targeting residents of the EU in EU, an incidental application because an EU resident came to India and used an app that was only applicable in India will not make GDPR applicable in India for that app provider, right? So there is a requirement under GDPR that you have to target EU residents. There is no such requirement under DPDP Act. So on cross-border applicability, you will find some very illogical solutions. Or
So basically, NRIs who are opening an account in Gift City, example.
Gift City is not outside India. It's only a
Gift City is
FEMA outside
India.
India. For the DPDP Act, Gift City is India.
It's within Indian jurisdiction.
It is India.
And for NRIs who are opening account in a branch office in, say, a Hong Kong or a Bahrain, now
that's the problem, right? In a Hong Kong or a Bahrain, for the 2 months that the NRI is located in India, technically DPDP Act applies to them.
no, they assume they don't come to India.
If they don't come to India, good. If you're dealing with pure offshore residents, purely offshore processing or processing in India pursuant to a contract with a pure offshore resident, you don't need consent. But in the second case, if you're processing it in India, the reasonable security safeguards and obligation to be responsible for your data processors still apply because the exemption is under section 17.
Quickly, one question or two questions, then we will start with the another session also,
Sure.
because we have to give the opportunity. And whatever your chat box is there, then we can take the advices from you for all the question, etc. also, yeah.
And an exemption data, list of data elements be provided for all the banks.
Okay, I am not answering what is personal data. Come down. Individual providing guarantee for corporate loan, DPDP applicable or not? Yes, great question. DPDP is applicable, but there are a couple of exemptions that you should be you should be able to avail. The first one is 17(1)(a), processing of personal data necessary for enforcing any legal right or claim. The second one is 17(1)(f), processing for the purpose of ascertaining the financial information, assets and liabilities of any person who has defaulted in a payment due on account to a loan or advance taken from a financial institution, which includes bank. So yes, it applies, DPDP Act applies, but there are two exemptions in section 17 that effectively take out the requirement of consent from it. The only two obligations that apply are reasonable security safeguards and being responsible for your data processes. Great question from Anish. If you're collecting, processing personal data from a data principal selected for hiring in an organization after an interview, what should be the basis of personal data processing? So from an HR perspective, when you get a CV upfront, you will receive it under 7A. it is an assumption that the person who wants to get a job with you has made that CV available to you for a specific purpose and has not indicated that it should not be used for that specific purpose. But the minute you look at that CV and you have done your analysis on whether you're going to hire them, and let's say you take the decision that you are going to reject them, then 7A legitimate use ends. You must delete that CV. You can't keep a blacklist or a grey list of rejected CVs with you. That is not possible anymore. To the extent you have selected the candidate, obviously you will get the consent or you will rely under the 7I exemption, which is processing necessary for employment purposes.
So regarding the deletion of the data of the rejected candidate, for example, is there a timeline? Because there should be some timeline, because there can be chances of any claims or litigations for unfair rejection. At the time, I need that by a CV for establishing that he lacks on this part, actually we are rejecting.
Sir, I think you will have to take that risk and get that data back when he files that case. Right? He can't file that case without that data being provided.
Some of the problems that maybe we may face from the HR experience.
There is. Sir, I mean, I can think of a much more logical issue. For example, an employee that has departed under a disciplinary issue, right? You would want to keep a blacklist. You want to ensure that this person should not come back. Or in some cases, banks have a policy where if you have resigned from the bank, then there's a cooling off period for about 3 years, 5 years, whatever, that you won't hire that person back. Now, all those sort of things don't really fall under the employment exemption. You will have to take a consent for processing data.
But if a customer, so if our ex-employee who has just departed under say shady circumstances or even voluntary departure
withdraws consent,
withdraws the consent, you have to erase the data.
Unless you can fit it in some other exemption, like if you need it for enforcing a legal right, if you need it for prevention, detection, investigation of any offense, you can fully just rely on the archiving exemption under 17(2), provided you don't take any decision based on that data. There are solutions. You will just have to fit and the act is what it is, right?
It is part of the employment agreement, all of these things.
No, employment agreement doesn't matter, right? Because consent has to be based on a privacy notice and cannot be in the employment agreement.
But that's no, the solutions part I'm saying. The solutions part that what you just
all that will still go out of the picture if he comes to you and says, I withdraw my consent, please take me out. So you will still have to find some exemption to fit it under, right? And it's not all perfect, but these 20 pages are all there is. We'll have to fit somehow if we want business to go on as usual.
But in that case, what you're saying, I heard, saying privacy notice, right? Privacy notice, whether for the employees then will be separate, for the customers will be separate. So privacy notice will keep increasing. Privacy notice will again, if you go today.
Logically, your privacy notice will have 2-3 tabs. Okay.
But unfortunately, that is what the problem is. You see, on one hand, we are trying to create, DPDP, right, where we are trying to protect the customer's personal information. Other hand, we are going to serve the privacy notice. If you go to any website today, it is 20 pages of privacy notice. What the customer reads in it, what they understand, it's just again a tick mark activity.
You are right for a lot of cases. But I can give you examples. I can give you examples of well-designed privacy notices, especially of entities who've designed them under GDPR, which are simple, easy to understand, do not run into 20 pages, and can be worked.
Chaliye, okay. No, thank you very much. Really, we appreciate for your nice presentation. Lot of eye opener how to use the data, because basically
so the biggest
we are using the
IT, sir, the next 2%.
Even we have to we will discuss with you which is the data we really require the exemption, because some of the data it will be very difficult to run the industry. Happy to. Okay, ji. Thank you. मिश्रा जी yeah.
In interest of time, we know
Yeah,
we are running late.
already we have exceeded the time in the earlier. Yeah.
Yeah. So I hope I am audible. On
Friends,
12.
we are in the second presentation from the E&Y.
So we have few directors and partners here. My name is Samir Shah, and I'm a partner with EY Consulting Practice. About 27 years of experience, and without doing much of an introduction, I'll just jump into the presentation. So these are the 4 topics we would like to cover today. First one is overall impact on banking entities, along with what is the core impact on the various journeys which we have, whether journey with the customer, whether journey with the employees, vendors. We are talking about personal data of all of them. So we'll cover that. As part of that, we will look at 2 very specific journeys for the simple ask of keeping it simple, understandable to everyone. We have taken journey of savings bank, entire journey, right from prospective customer to someone closing the account. We also taken journey of mortgage products, mainly home loan products. That is the second journey we'll cover as part of section 1. Section 2 will throw some light on consent management. Our colleagues from CAMS, they've already spoken about legal aspects, what exemptions you can claim and how that wording needs to be there. We will cover more of the IT aspects, consent management systems, and various nuances around how do you configure your IT systems, applications, and things around that. Third part is driving DPDP in your organization. In our experience, what is working well, and that is the quick section 3 we'll cover.
Yeah.
Section 4 is some of the takeaways in terms of what would work best, given that we are already 3 months. Incidentally, today is the third monthly anniversary of, so 13th November we got the rules out, and today is 13th February. We are exactly 3 month mark out of 18 months. 1/6 of the time is gone, and I hope that all of us are 1/6 also in our journey in terms of completion as well. So ideally, it may not be a bad idea to celebrate monthly anniversaries so that we keep track of that 4 months gone, 5 months gone, 6 months gone, and so on and so forth. So key takeaways in terms of ideally what looks like for another about 15 months.
Yeah.
And a generic roadmap. How does it look like? Ideally, what you should be doing in maybe various other combination of sequences, but we have a 17-step roadmap. We'll be very quickly cover that. So that is what we want to cover today. And as we did for the earlier session as well, we'll take all the questions towards the end.
Yeah.
We'll just finish off quickly our presentation. We are assuming that everyone knows DPDP. We will not get into DPDP interpretation aspect. We'll just get into the implementation.
Part. Yeah, that already been covered in the first session. Yeah. And there is no end also for this. Yeah.
Yeah, we can have a whole day as well, and still we'll be left with so many questions.
Okay. The implementation are very important.
Yes. So the first major hurdle and bottleneck which all of us are seeing is we are dealing with multiple types of data. Some of our clients made a list of 30 personal data list. Some others made a list of 75, and there could be someone more having more higher records as well. But that is where we are. Someone may say that name plus address is a personal data. Someone may say that I have telematics data of the fleet which I have financed, and I get telematics data of where their car moves and who is the driver and driving patterns and all. And that could be a personal data. Likewise, someone may say that all the cache which I have in terms of browsing histories and things like that, it's a personal data. But all the biometrics which we have is personal data. And likewise, so on and so forth. You can create a list, and that is the first hurdle all of us have. And the good starting point could be that based on some of you may have already started with the data flow kind of data flow maps kind of activity, wherein you map each of the products and each of the functions within your organization, and you identify what kind of personal data is there as part of that. That could be a good starting point to create a list of all the personal data you have. And there could be an opportunity to somewhere also rationalize a lot of that, because some places passport number could be referred as pass number, some places passport number, and so on and so forth. So you don't want to create a duplicate list of multiple same personal data which you are referring to. So that could be a good starting point. That is the first problem, and the way there are ready-made rules configured in some of those solutions, which will give you a list of personal data, which you are dealing with at least on major systems and major structured data, unstructured data side as well. Consent complexity, we heard a number of complex situations, but it would become more complex if you were to configure that on your systems. As of now, in the current situation, your core banking system may be taking consent for all the current use cases and current customers. Your loan management system again may have a provision of showing notice and taking consent. These are all we are talking about historic consent. The data which would exist as of 13th of May 2027. That is all historic data, right? Because the act and rules will come into play on 13th May 2027. All data which got gathered till that point in time, and you will continue to process beyond that point. All of a sudden, you will not close all the accounts on 13th May. You will continue to process all of that. How do you get all that consent which got captured over a period of time, over 10 years, 20 years, in various forms, maybe paper forms, maybe on some applications, and maybe through some intermediaries, someone else passed on the lead to you and you carried on from there. How would you take all of that? So looking at your application stack, understanding where you have already gathered consent, trying to take all of that first as a first step on a single platform. You may be simultaneously building your consent management platforms, at least taking all the historic consent at one place so that you are well aware where you have consent and where you do not have consent. Earlier speakers also covered about look at the consent which is already obtained, isn't meeting all the 6 mandatory requirements, so it is freely taken, there is an affirmative action, and so on and so forth, it is not bundled and things like that. Look at all of that, and you may realize that you have not taken consent at all. It is there, but it is not there. So again, this is the time you need to reach out to all of them. Again, you need IT solution, tech solution for that, where all those crores of customers give them a notice that, hey, I hold data for you. These are the purposes I'm using your data. And if you're already taken consent, do not fit into the definition of consent as per the DPDP Act. There is an opportunity to take new consent, maybe. There are gray shades here. But if you want to take very risk-averse approach, you may think of doing that as well. And again, you will need IT integration, IT systems. And first step would be at least look at what consent you have. Does it fit into the DPDP Act definition? If it does not fit, then what do you want to do? You want to still rely on maybe some other leniency which may come your way in the future, or you want to start at least giving. And the second situation there is that you have taken a consent, it fits within the DPDP Act definitions. Then you will need an IT solution for sending out at least notices, because that is what is required. You need to send out notice that I have so and so data, this is what it is being used for, and so many other things which needs to be there as part of the mandatory notice which is to be given for all the historic data. So some solution, you send out whatever WhatsApp or text messages or emails to all of them, send them notices. Some of them will bounce back. Those numbers may not exist. Those email IDs may not exist anymore. Again, you need to have an IT solution. What would you do for those kind of you? First of all, you'll try maybe say SMS route. Some of them would fail. You will need a solution where you will try email route them. You may route WhatsApp or whatever. There are so many other communication channels. So an IT solution for, first of all, identifying all the existing data principles, data subjects, where you continue to process data and you intend to continue process data beyond 13th May 2027 as well, and giving them notices, also examining consent and all. So that is the second consent related complexity. I have just taken one example of historic data as on 13th May, but there are so many other complexities in terms of various intermediaries we deal with. We get leads from somewhere else. There are DSS, DMAs. They are like mom and pop shops. They may not have IT systems to capture consent and all. They may take consent in paper form. And would you digitize that? Would you send an intimation that, hey, this is the record of your consent which you gave. This is just for your records or something like that. Or would you just keep that paper record, scan that and keep it in your consent systems? So all those are various complexities around consent. There is regulatory overlay as well. So mainly financial services regulators, since we are all the banks here, there are several existing regulations by the Reserve Bank of India, by SEBI, by some of the other central laws which we have, and some of them are, some of you are aware of digital lending guidelines. There is a requirement of taking consent for all the DLAs, digital lending applications, as well as all the LSPs. There are localization requirements there, as well as there is a requirement for taking consent. There are requirements if you fall into any of the e-commerce kind of definition where you are offering goods and services on your online platforms, and some of you would fit into that kind of definition. Again, there is a requirement for taking consent as part of those e-commerce offerings and whatever data you gather for opening of accounts. So that is the second overlapping requirement. There are localization requirements around payment systems data. There are requirements around Aadhaar Act. You cannot store those numbers and various other things around that. There are requirements around CIC, which is credit information companies, and all the credit reports which we pull out. Only designated or specified entities can do all of that. So there is again overlap there. There is again consent requirement before all that could be pulled out. So there are almost like about 10 plus simultaneous requirements. And ideally, a framework which you put together should be combination of all of that, so that you are not kind of doing separate compliances, a different type of compliance for digital lending guidelines, a different compliance for DPDP. When it comes to e-commerce, you are doing a different compliance. So unifying all of that and finding a solution which complies to all such requirements. Obviously, all of us understand that DPDP Act is overarching requirement over and above all the other acts in India, so far as it does not contradict any of the other requirements. Wherever there is a contradiction, Act is very clear that DPDP Act will prevail over any other requirement from central government or state government. If there is any contradicting requirement, then DPDP Act would prevail. So that is where regulatory overlays, wherever this are consistent, we need to comply with. So there is another complexity which we are looking at. This could be the journey for any customer. It could be a retail banking customer, it could be a lending product, it could be whatever, whichever customer which we are looking at. We could look at this as one of the simplified journey for that there would be a lead which would come, which is the pre-application stage. There would be a vetting process, underwriting process, and there would be approval, onboarding. And once the product is sold, there will be when this product is sold, accounts may become dormant as well. Yeah, it is already shared. It is shared with IBA, so I think they would be transferring. Yeah, already shared. Yeah. And relationship will end at some point in time once the product and services are the obligations below that is fulfilled, and archival, deletion, and that process. So any product if you can think of will fit into this this life cycle, and you will see complexities around each one of them. And IT can solve most of those problems. Lead and pre-application with predefined timelines. One of the things which we discussed before, that someone is not a customer, but you are in the vetting process whether someone can become a customer or not. And if that lead gets dropped, you are not accepting that for whatever reason, that customer. How long would you keep that data of that customer? And your IT can solve that problem, that after whatever X number of months or X number of days, all the personal data which are identifying this columns of your whichever application, your LMS systems or CBS systems or whichever systems gets dropped from there, or maybe gets anonymized and gets archived for all the other statutory purposes. One of you were asking a very pertinent question, that if there is a need for proving that there was no malified intent behind rejecting an application, then you can archive all of that. You can pull out those records as and when required, but you need to stop the active processing of that. And your IT applications can be very well configured for doing all of that. In progress applications as well as approved and onboarded applications, there is a consent driven legitimate use, and you can very well do all of that. The only thing required here is that unifying all such handshake with the customers, getting them onto one single platform wherein you can show them notices, and you can provide they can provide consent there, so that those records could be used by all the other applications for all the other processing purposes in future. And you can very well, through your systems, you can very well identify whether there is a consent flag for a certain type of processing or not. And we'll come to consent part as well, wherein there is a BRD by one of the divisions of MITI, and we can look at the business requirements document, and there are specific meta texts which are spoken in the BRD business requirements document. So you can enable all those texts for all the future processing like active servicing as well as collections and dormant accounts. Closed relationships based on the timelines, you can data classification kind of IT configuration will come very handy here. That is where you can tag all such personal data, PII. You can define the age and life cycle of that through various aging and classification solutions which exist. Most of the banks would already have those solutions, and you can define the timeline of whatever 10 years, 12 years, whatever various acts which require you to store information as per Companies Act, as per various RBI regulations, as per any other law in India. You can very well define that aging, and you can solve the problem of archival, how long you need to keep that data beyond stopping of processing as well. So these are all the in general customer journeys. We'll just look at two very specific customer journeys. This one, sir. So we'll look at savings account customer journey. And if we look at when there is a savings account kind of customer, someone walks into a branch or someone comes online for requesting for opening an account, there are KYC, CKYC related requirements. Some of the complications which you may come across is that someone would walk into a branch and someone would fill in a physical account opening form. And the complexity there is when someone is filling in the physical account opening form, DPDP doesn't apply at that point in time. It is paper record. It is not a digital record. At some point in time, it will get into your systems. Would you wait for that point where it will get entered by maybe your client relationship manager or whosoever? That person will enter those details, right, on behalf of that customer once everything is done. Would you wait for that point to shoot an email for consent and notices and various other things? Or would you accept consent in paper form? You will digitize that at a point where someone is actually digitizing those records. And there is no right or wrong here. Both could be right, but there could be a complication in the form of that when you are doing a communication while digitizing records, showing notices and asking for consent. If you do not get a reply to that, what happens at that point in time? It could be always better for such kind of, I would say, phygital kind of customers who are half physical, half digital. From a point, it will become digital, right? Maybe better to take paper records in terms of notices. There is a printout of whatever notice, there is a printout of consent, there are clearly ticked boxes, it is not bundled and various things are fulfilled. That is digitized while doing digitization of those records. And maybe a communication is sent to the customer or whosoever is that person that here is the consent record which you gave on so-and-so date or whatever, all that kind of stuff, which will actually formalize everything from paper records to your digital records, right? So those kind of things may come your way during opening of accounts, account operations, transactions, balance inquiries, statement generation, all that would very well fall within the ambit of the digital journey and the consent and various other things which you would have already done. But there could be a newer way of doing these things. All of a sudden you introduce, say, AI for doing analysis and sending out alerts to the customer. Hey, we are seeing that your account has got unused balance and you can very well opt for this 3-4 products. So those kind of situations, obviously you can't go back to the customer and ask for new consent, right? And there could be, and these are all some of the things, use cases which we can think of now. There could be so many use cases which even we don't know what's going to happen in future, right? A robo may come in the branch and may talk to someone and whatever. So many things could happen. And we cannot visualize all such use cases at this point in time. So one of the things which ideally, which makes sense is that not to become very specific when looking at notices, consent, and various other things around that, but make it keep it more generic It may sound very contrary to what is the requirement of the consent, but there is a way out of balancing everything, not becoming too generic, not becoming too specific, and saying that this would be used for all the future IT advancements and use cases around that. I'm just giving an example. That will cover all your AIs and whatever robotics and whatever may come in the future. Likewise, various other things could be very well devised so that you are at least safeguarded from all the current use cases which you want to use your data for, and all the future use cases as well. And IT systems can very well enable all of that, wherein you can have generic use cases and you do not go into multiple pages, and that is how you can enable all of that. We spoke about nominee details and all, and there is a parental consent requirement, and obviously legal fraternity would have their views as to whether it is a personal use or not personal use. But those who want to play safe here, obviously you will need integration with DigiLocker or your existing records in the bank, so that you can verify the parents and various other verifications which is required for any minor data, right? There is an obligation, extended obligation when you are processing minors data. So systems will come very handy. You may already have those verification systems. It is extending those systems to your overall journey of customer onboarding. Dormancy management would be an area which can be done only by IT systems. You cannot do it manually. You need to do aging of the personal data which you hold, and that is where you already would have some systems wherein you tag your personal data, and you do aging of all of that. And whatever we spoke so far as to 10 years, 12 years requirement, after that it needs to get into your archivals or dormant kind of situations wherein you stop processing, and your system ideally should create linkages to all the other systems which uses that data, so that you no longer use that data. You just archive that data, gets off from all other active usage, and all other systems just stays in the archival system. So these are some of the considerations for the savings kind of use case which we have. Just an example of various systems which will come your way. This is just an illustration. There could be hundreds of more systems, but broadly CBA, LMS, LOS, your CRM systems, your data lakes, and your campaign management systems. And the complexity here would be you would be having your partners working with you for so many of such systems, either maintenance part of it, or some of these systems could be completely owned and operated by them. For an example, your campaign systems, you may have a partner, your SMS gateway partner, who would be shooting out all the SMSs based on whatever details you provide, and integrating with them. If someone takes out or opts for consent withdrawal, how do you withdraw that from your partners as well? So integrating all of that wherever possible. There could be a trend which may be which may be seen in the near future is wherever there are critical records that also volumes go beyond a point, you may start looking at internalizing those systems, because then you'll be in a better control for managing those thousands and crores of records. If it is like your SMS gateway partner or any outbound campaign partner, it would be very difficult for you to come to control what they do with the personal data. Though you would have all the contractual protections and all the other assessments and audits at periodic point in time, but again, there could be a genuine limitation in terms of how much you can do when someone is not within your boundaries of your control. So these are all the systems which ideally would need integration in terms of first of all, consent management system. Someone would, if you extrapolate, not just the consent, but someone were to exercise the right that provide summary of my data, or right for correction, and data is spread across all such systems, right? So someone were to exercise right or right to access, basically provide me summary of whatever data you have. If you think through that, and if you were to do a mock simulation of that, for an example, Samir Shah is your customer, and Samir Shah comes to you and exercises right that give me right to access, give me summary of all the data which you have. How would you gather all that? And obviously there will be a time window of whatever X number of hours and day in which you need to fulfill that request. So ideally think through that. You will need some IT solutions for doing that. Ideally data discovery kind of things would help you, which will run scan across whatever, maybe scan at a scheduled time, all the request which comes up to that point in time gets into your scan, finds that Samir's data in this 15 systems, this tables, it is also there in this many partners. That is where your various data flow maps and all will come handy. You will be able to identify these are the X number of partners who also hold Samir Shah's data. And then you'll come, you'll summarize all of that, or if there is correction required, you'll do all of that. But again, IT will play a big role. Manually, it's not possible for any bank who would be present either online here or present physically here. You cannot do that, right? So again, IT would play a major role. You would already have some of the systems with you, some of the data discovery and classification systems you may have already invested. You can use some of them. Some of the DLP systems which all the banks have, you can very well use that for initial period, though DLP is meant for doing something else. Ideally, you should not be using it for this, but you can very well discover data using DLP systems as well. So think through all of that, and these are some of the challenges which will come across as soon as 13th May kind of thing will approach. And on 13th May, you may realize that there are 1,000 data access requests. You never know, and how you are going to do that. Doing a simulation will definitely help you. Once you are at a point where you have some systems in place, you have processes in place, you have people in place who can do all of that for you. Right? So these are all the some of the banking system example of that. This is existing to bank and new to bank, and obviously there are different journeys for both of them. Someone is your existing customer, you already hold records for them, you already have, you know what you can do with their records, what kind of processing you do. Those are existing customers, and you have your boundaries drawn that you need to play within these boundaries. You cannot go beyond that. For new customers, it's a new canvas for you. You can define at that point in time. So we may think that we'll create notices, we'll define consent, and we are done for at least foreseeable future. It doesn't work that way for all the global laws where companies have gone through this journey. Consent and your notices and various other processes will need continuous revision. Existing customers, you already have boundaries drawn. You will not like to play with those boundaries. But new customers, you can always extend your boundaries. You can add new processing. You can add new purposes. You can tweak your systems for having those additional things, right? So that is where both needs to be treated very differently. One size fits all may take you only to a point where you will find various limitations on usage of data. If you differentiate them and create separate different type of journeys and continuously evolve in your notices journey, consent journey, and related systems journey, it will definitely help you. One of the things which you spoke about, already discussed, was existing customers and data, which all the data which would exist on 13th of May 2027. And these are your consent records would be very different for this customers compared to from 13th May onwards, whatever you are going to do. So one question, and there is no right or wrong here. Again, if you start taking consent from today onwards, in line with DPDP, are you reducing your backlog of your historic customers? Answer would be yes. If you comply from today, you show them notices as required by DPDP. If you take consent as required by DPDP, if you have your, maybe whenever that consent management system comes into place, you upload all those records which you gather from now till that point when the consent management systems are there. Will it help you in reducing your backlog? Definitely yes, right? Then at least from now to whatever is the date, 13/20/2027, another 15 months. It is very logical, right? You don't want to have that 15 months backlog. You want to just show notices, take consent as recorded by DPDP, and at least 15 months every day, thousands of new customers you are adding or whatever you are doing or servicing. At every service point, if you take consent, it is easy to take consent. If at all you need to take consent, your previous consent does not fall into the definition of the consent. So only IT can enable all of that. Any customer, existing customer coming for any service, that is the point. You can very easily show them the notice and gather consent in line with DPDP and reduce your backlog as well. We'll very quickly look at mortgages as well. This is slightly different in terms of the duration for which you keep data is very long. There are so many other, I would say, third parties which get involved in the whole, maybe like if you take home loan kind of an example, there are surveyors and there are investigators and there are law firms and who will vet the documents, and there are several other third parties which will get involved as part of the overall mortgage journey. There is also generally we do not pay attention to, there is existing seller as well if it is a resale kind of a transaction, and which if you are funding that, financing that transaction, there is existing owner as well, and you have all the details about existing owner as well, name, address, and PAN numbers and everything of the existing owner, where that person is selling to the person to whom you are offering home loan. So again, various nuances. Would you take consent from that person as well, existing owner of the property, because those records are going to go into your system? Would you rely on the existing seller to get you the consent for all of that? Or and there is no right or wrong. Various journeys could be designed around that. Ideally, so far we would not have created a journey where you ask existing owner of the property also to come onto your platform and do some data feeding there. Generally, it is the person who is taking loan. That person will come on your platform, upload documents, and do whatever is required, right? You may want to tweak your journey where existing owner also comes, does some verification through whichever OTP and all, provides consent for keeping that data, and whatever processing which you need to do, because when various situations where home loans are paid before the due date or on the final due date, that is where those documents will get passed on, or maybe may get returned. Still, you may maintain a copy of all of that, and there are so many other journeys and situations. So again, changes would be required. This is a long-term thing. You may offer 15-year loan, 20-year loan, and this is where it becomes more complicated, retaining those records, fulfilling those obligations for 15, 20 years. Any point in time, you may face a request for access to data correction, data erasure, and things like that. So all those things are slightly different when it comes to mortgage kind of a journey. And ideally, system can solve all of that. So whatever we spoke so far applies here as well. It needs to be more long-term. When you envisage what you want to do with the home loan journey, you need to include all the other players which we spoke about as part of that journey, and more stable kind of journey finalization rather than making tweaks and changes to that on an ongoing basis. Very quickly, we'll come to the. So anyways, we spoke about all of that, and these pages would get shared with you. We'll come to second part of our presentation, which is regarding consent. We already spoke so much of consent. Earlier, firm also spoke about that. But very quickly, around consent, and there is some lag. Consent management framework will play a major role in terms of whether you want to have decentralized consent, take consent on each of the applications, which we just looked at, and then replicate those records onto a central platform, or you would divert anyone coming onto any of those applications onto consent management system, take consent then there itself, and divert them back onto whichever journey they come from. So these are all the options, and which are some of the existing application providers, your CBS systems, your LMS systems. They may also start offering consent management modules along with that. So you need to again be clear in your mind that would you be using those consent management modules? Say your CBS provider may start offering consent management module as well, or your LMS provider may start providing consent management. Would you use that, or you would divert all of them onto your consent management module only? There is another complication here as to the Data Protection Board of India approved consent managers. One of your HNI customer may come to you and say that I will use only that XYZ consent management platform. I'm not comfortable giving consent on your consent management platform, because if I look at myself as a customer, would I maintain my consent records on 10 places? No, I want to have it one place so that I can control, I can see that this 50 places I've given consent, this all data exists and all of that. I don't want to log into bank A on day one and bank B on day two, and then struggle with all of that. So if that happens, and that will happen, that customers will demand that I will not give consent on your platform. I'm going to go to that platform. And you need to have, whatever you design for consent management, various application stack which you are looking at now, create those hooks where you can integrate those platforms. You can replicate records from those platforms onto your central consent management system, so that you have complete view, and your customer is given that flexibility of providing consent on those platforms as well. So that is what would be required. Most of us would have seen the business requirements document, and this is not very new, because most of the all the account aggregators are currently following same framework. They already have consent management as part of the account aggregation module. And you would see that I was just checking their site, Samati website, where all the aggregators are listed. They have already fulfilled 348 million consents. So we may think that consent is a new something very new, and we are just trying to invent something new. There are already 348 million consents they've already processed as part of account aggregator framework, right? So if you look at one of those modules, one of those products, you would get a good understanding as to how the consent management needs to approve. This is the DEPA framework under NITI Aayog. So most of you would be knowing that. Because the same thing has come out in this National E-Governance BRD, which has come out under NITI as well. There are 5 key life cycle stages which is mentioned in the BRD. All your consent management systems ideally should have those 5 stages. You will first of all collect consent. Your applications and various other purposes needs to validate at various points in time, that what consent exists. There would be a point where someone may need to update consent. I gave consent, but now I want to change some of the parameters. There would be a renewal required. Someone may have given consent for 5 years, and as soon as the 5 years are over, you need to renew, at least do something for renewal. And there would be a withdrawal of consent. So these are the 5 stages, and whatever you build, whether in your applications and central consent management, you need to have these 5 modules of stages of consent management. There are 6 key modules which are defined in the BRD. Whatever you build, ideally should have those 6 modules, and you could have more modules, but these are the kind of looks like bare minimum modules which are required, which covers the life cycle, which covers logging and security, and which also covers access to the data protection board kind of requirements. And that is what is around consent management systems. Those who have started building consent management or started evaluating the already existing consent management systems, one of the recommendation would be that compare that, or at least ask for compliance with the BRD of those solutions, so that you are sure that if this BRD were to come as one of the mandatory requirements for your internal consent management systems or any of the external off-the-shelf systems which you are considering, they are complying with the BRD. There are certain meta tags which are mandated: customer ID, processing ID, timestamp, and the status of the consent, whether active or lapsed. These are the 4 key meta tags. So whatever you design, ideally should have at least these 4 meta tags. And that is where, if you think from that point backwards, what is the unique ID you are going to keep? Is it customer ID? If it is customer ID is your unique user ID, then what happens to the prospective customers? You would not have assigned them unique IDs. What happens to the non-customer data subjects like employees and vendors? So first of all, design that schema of what is the unique ID for you, for any individual, different types of data subjects and principles you are going to deal with. And the second thing is processing ID. So a catalog of processing. Only you would know that what processing you do. There could be 40 or 400 different processing which you can envisage, and processing ID for that, and a tag whether consent is there or not there, along with time duration. So these are some of the things which you may want to consider while you are building your consent management systems. So I think all of us together spoke about this in detail, about consent strategy. One of the things which even the earlier speakers went into is that one of the very obvious choice which all of us will make, that consent ले लेते हैं, नहीं भी जरूरत है तो ले लेते हैं. At least we are safe, right? If there is any gray area, consent ले लेते हैं ना, बाद में करेंगे जो करना है. What you are doing is you are creating a right for someone to withdraw that. So if you are doing processing under any of the legitimate use, like employment purpose, like prevention of any non-compliance with the law and so on and so forth, you are within your rights to do that processing. Would you still go ahead and take consent for that and create a right for someone to withdraw that consent? You would not do that. So understand all the exemptions very clearly. First of all, your catalog of processing. It could be whatever 10 or 100 or 1,000 processing which you're doing. Outbound calling could be one processing. Sending out email, sending out account statements could be second processing, and so on and so forth. You can define your processing into the bundled way also. And then when you look at all those processing, all that processing catalog, a lot of those processing activities would fall under exemptions, under Section 17 and various other exemptions which earlier speaker also spoke about. Identify all of that. No need to take consent for them. Do not include them. If possible, try to include that in your notice that these are following activities falls under our exemption so and so. That could be one of the ways for dealing with that, and there could be many other ways. We are just suggesting, or we are just giving illustration of one of the ways. But that could be one of the things, that all the legal processing, the second part here, legal processing, regulatory processing, all the risk and fraud prevention, and there could be several processing under that, and ideally that all falls under exemptions. There is no consent required, there is no notice required, there is no consent required for any of that. Partner sharing is a big area here, that who will take consent. You may get leads from somewhere. You may have some co-branded cards, for an example. Customer landed on that platform first, and from there you got the lead, or you are passing on the leads for insurance products, and so on and so forth. And that is where it could be that this is what we are seeing in some of the global laws, that multi-party consent kind of thing would come into play, wherein a consent would be on behalf of several entities, several data fiduciaries, and that is what would fulfill the purpose of processing done by them, as well as the point at a point in time from where you are taking over and you are doing further processing. So those are some of these solutions, and consent management, when you are designing, ideally should have those kind of provisions where you are having an option of taking multi-party consent as well, and your partners and you need to decide that are you using their platforms for taking consent, multi-party consent, or would they divert all of that onto your platform for doing the multi-party consent. So these are all the and nothing. There is no wrong, right or wrong, but you can very well you need to think of that now, right? Not after you implement those consent management and various other integrations which would go along with that. I'll just spend 10 seconds here.
Sorry, after
Yeah, after. So I think I'll take another 10-15 minutes next. I'm going to get into the questions. So one of the easier way of based on discussions and various whatever practices we are seeing, all the mandatory consent, you club all the processing activities into mandatory, that if you were to offer a product, this is mandatory. You cannot go beyond this. If someone says that I will not give consent, you can very well refuse to offer that product or service. All the optional consents, those are all processing activities catalog. Ideally should have classification that this is mandatory, this is optional for me. And one of the questions which you would come across is that will you take consent for each of your product services? Is it product specific? You're offering a loan, say mortgage product. Would you take consent for that? You're offering, say, a savings bank product. Would you take consent for that? And it may look very good that you are so detailed, so granular. But is it practically possible to do all of that? Answer could be no, that because you don't know what future products also you want to do and so many other things. So creating a bank-wide wrapper onto your mandatory and optional categories where you do not talk about any product or services, scan your notice language and consent language thoroughly. There should not be a single word on your product or services. Ideally, if you are doing that, you are limiting yourself. Then those notices and consent would be tagged to only those products and services, right? You create class of products maybe if required. So mandatory consent without which you cannot go ahead with offering of services, optional consent, and having a bank-wide wrapper on all of that. This is a 3-layer approach which works very well. And the same approach worked very well for all the global laws as well. If you go to any of the websites in Europe, you'll find generally this, if you try to open a bank account on any of the banks in Europe, you'll find generally this 3-layer approach wherein they will say that these are all the mandatory consents. There could be a box wherein you say that I accept all. It is not bundled. You are giving an option of ticking individually as well, but for the ease of your customer journey, you are also giving an option that I put a tick and everything gets ticked, right? So some journeys like that would help you in your mandatory data handling. If someone unticks any of that, journey doesn't go forward. Once all those ticks are in place, you can offer all the optional processing activities. And there is obviously an option of unticking any of that. Still, you go ahead with that. And then the bank-wide wrapper, where you say that I will use this data for all cross-selling, upselling, all future purposes and whatever. Obviously, you can't say that your life is mine for the rest of my life and your life, but still you create a good, I would say, hook for yourself for accommodating many other things in future as well, right? So these are some of the thoughts which we have on consent. There are some examples here and you will find multiple of them. All of us have used multiple of those applications and a lot of avenue for creativity here. And that is where one of the best thing is that visit 100 bank websites who are already under some or the other law, and you will get fantastic ideas as to your UI UX, how the consent can be structured. And that is what some of the examples are here as well on our pages as well. How would you drive DPDP in your organization? Would you catch hold of all the function heads, business heads, and tell them the requirement and start doing that? Would you go to board and apprise board of the DPDP requirements and the implications of that, and board drives that? There is no right or wrong, but what works well is top-down approach when it comes to DPDP kind of compliance requirement. It is not an activity of single department, maybe privacy organization or legal organization or compliance organization. Every individual, every employee, every customer and every other data principal who is involved with that bank is very much part of the game. And involving all of that, it has to be top down. There should be a structural independence created for the privacy organization. It could fall into, and there could be questions that where does privacy sit? Is it legal organization, compliance organization, infosec organization? And it doesn't talk anything about that. The rules are also, and ideally they should not as well. Only thing is that they should be independent, right? There should not be any conflict in terms of if someone were to, if a person is a DPO, if that person were to say no to someone that you cannot do this processing, is there any conflict in saying that no? If the answer is clear that no, person is not under any influence or obligation to take independent call, then anyone can be, it could be under compliance, it could be under data organization, it could be under any other organization as well. But structural independence would be required, whichever is that department. Otherwise, if there is, say, one of the largest business unit also starts assuming role of data protection, obviously there are conflicts of interest. That person or department would like to do as much cross-selling as much possible, and there is a conflict there, right? So that is what is the structural independence. Enablement versus execution. Is it like a small team of privacy professionals? Can they do anything and everything? We are talking about hundreds of activities here, right from designing a framework to designing of notices and consent and various other things in terms of encryption, anonymization, tokenization, data minimization, and there are so many hundreds of such activities which are required as part of the overall DPDP compliance project plan. Can a small team of privacy professionals run that? Answer would be obvious no. And that is where creating privacy champions within the organization, delegating those tasks which can be very well done by the privacy. Like we have concept of this information security or cyber champions within each of the function. Very similar concept, even the same people could be your privacy champions as well. Taking them through a structured training in terms of DPDP requirements and obligations and various things around that. And you can very well create a good ecosystem of your foot soldiers within various functions who do a lot of things, and privacy organization can focus on more of the governance and overall activity of looking at the wider level structural and strategic initiatives within the organization. So this is the operating model which you again, in line with that operating model, you can very well create a RESI. This is just an illustration. You can very well flip whichever line item to whichever other line item. But a RESI would be very important, wherein who is responsible, who is accountable, who needs to be communicated, right? So all that would definitely help you. Otherwise, you will come across this kind of situations. Again, if you do a mock of, say, as of 13th May 2027, there is a data breach and there is personal data involved in that. And if you do that simulation, first of all, who would detect this? Is it InfoSec team? Is it IT team? Is it privacy team? Once it is detected, who will take responsibility of intimating all the customers who are impacted? There could be thousands and crores, and intimating to board as well. So without delay is the requirement, right? There is no 72-hour deadline. It is without delay. 72 hours is a detailed reporting to the board about the breach which has happened, RCA plus why it happened. That is the 72-hour deadline. 72-hour deadline is not intimation. Intimation is without delay. It could be 30 minutes, it could be 1 hour, it could be 4 hours. You need to take that call when you want to do that intimation. And who will do that? Which systems you will use for doing that intimation to customers and various other people? Who will authorize that? That now press a button and 1 crore emails will get shoot out. And next day morning, it will appear in the newspapers as well. So where PR gets involved, do you do intimation to media beforehand rather than media coming to know from those? So likewise, I'm just doing a mock of what could happen. And this RESI will come very handy. In case of personal data breach, who is R, who is A, who is C, and who is I would help you. Coming to the last part, and I'll not take a lot of time. This is the 17-step journey which you may want to look at. You may have already completed a number of these steps within your organization, but ideally data flow mapping, data discovery could be the first exercise. At least you need to know the quantum of problem. That is possible only when you do data discovery, whether you do manual data discovery or you do data discovery using some tools. Also, you need to understand who are the third parties you are working with, what kind of PII you have. So this is the first cut of person data inventory you would have. This is where your processing catalog also could start getting finalized. And these are the 40-50 processing activities I'm doing. And this could be the starting point for anything and everything we spoke about so far. Whether your discovery systems, consent management systems, your notices, your retrospective data notices, and so on and so forth, everything is dependent on how well you do your data discovery. Unless and until you will discover, you will not be able to achieve any of the steps after that. Privacy framework, earlier you put in place, you will start with the journey much earlier rather than starting at a later point in time. So framework will become base design, base blueprint of what you want to achieve for yourself. It could be policies, procedures, templates, various other things which would be required for each of the newer processes. We are very new to data subject rights. We are very new to privacy data breach management. We are very new to privacy assessment on third parties. We are very new to data protection impact assessment. All this will need at least, if not more, 6 months of settling in period. When you run all of this for 6 months and you will understand that this is working, this is not working, and things like that. So ideally, 13th November 2026 should be your go live date for anything and everything which you are planning. And you will run 6-month pilot. That is where it will give you an opportunity to optimize whatever we spoke so far. Define, organize, ideally identify who are these people who will run this. As of now, we are seeing a lot of banks, they are still in dilemma as to whether this is legal or infosec or compliance, or they want to create an independent structure. But better, earlier you decide, better for you. There would be people who would be accountable for hundreds of activities which are required. And that is what would be required. So these are all the foundational components. Ideally, you should have done it by now. If you've not done it, ideally you should do it at the earliest possible hour. The initial 4 foundational components. Unless and until you do this, you won't be able to do anything else ahead. Because unless you have this, who will do DPIA? You would not know, because you would not have defined your policies, procedures, structures, RESI, and all of that. Consent touch points you won't be able to define, because you would not have drawn your journeys and you would not know where you need to take consent. What is the point where customer is coming to you for the first time? That is the point you want to divert them onto consent management systems and take their consent, right? The next one is rolling out all the other processes which we spoke about, running a 6-month pilot with all the processes which we spoke about. And that is where you will have an opportunity to look at whether they are working, not working, optimization opportunities and things like that. Privacy tech and all your PETs would be very, very important. This is not a 1-month implementation. This will take at least 6 months for you, if not more. If you look at solutions like consent management systems or solutions like data discovery, for the banks, most of the banks here, it will take at least a couple of months for completing your discovery scan. And then there would be a period where you will remove all the false positives and you will arrive at your inventory if you are going for automated discovery. So keep those timelines in mind and ideally prioritize whatever tech you want to use. Identify them in next few days and weeks time, so that you leave yourself enough time for automating whatever is required. And I will leave it to the next speakers for talking about tools and various things around that. Vendor assessments, they could be the weakest link. You do everything within your organization, but some weak link at your one of the vendors may take away all the hard work you would have done in your organization. So work on that through privacy assessments, integrating them, minimizing their footprint wherever required. Contractual obligations will work up to a point, but those are again very important. Like all existing contracts, whichever comes for renewal, DPDP clauses, are they going in there? Are you passing on your liability for DPDP? Because if, at a point in time, if you say that, if you contact your thousands of vendors and say that these are the 2 new clauses you want, a lot of time will be required for convincing them for all of that. Your contracts with not only your vendor, with your intermediaries, with your partners, with your employees as well, for all the non-employment purposes, are you thinking of putting those clauses in your appointment letters that these are the non-employment purposes, and I will process your data for all these non-employment purposes as well, like the policy thing which we spoke about, or club membership which we spoke about, and so many other things. This is an opportunity. Any new offer letter goes out, appointment letter. If you are adding all of this, at least contractually you are safeguarded that you've given, you've done whatever is required from DPDP perspective. Awareness goes a long way. Starting awareness now, you'll get a larger army to work with you. If you do it after few months, then obviously you are somewhere limiting your hands and legs, which can help you. And obviously all the assurance functions within the organization, whether it's internal audit or assurance functions, earlier they start with the privacy assessments, privacy audits, better insights, independent insights you will get as to what is lacking, what needs optimization, and things around that. So this is the 17-point journey, and you can rate yourself objectively that how many circles you can cross off that I'm done with this, and rest of them you can divide in 15 months and have a plan for that. So I'll just stop here, take questions if we are left with time.
I think we can start the presentation of the lectures because it is basically, you have very rightly explained each and everything. Also, 6 month time would be minimum. Then after that, they will be in a position to understand where they stand. Because 6 or 3 months, 9 months, still they will be left with the rather 5-6 months.
Right.
Because 18 months, whatever they have. So any solution, etc., is available as on date such type, because it will be on IT system only.
All the solutions are available. We are fortunate that we have GDPR to look at, we have got California privacy to look at, and several other global laws. And a lot of those vendors have come to India as well. A lot of Indian vendors are there, and those systems are available.
Because whatever you are saying, I fully agree. Account aggregator.
Yeah.
That is a entire thing has on the basis of the consent.
Yeah.
There may be definitely some bank is using or NBFC is using the data of the bank, etc. Also, so they are taking the consent.
Maybe doing a workshop to start with.
Yeah.
At least with the senior management, well, you do whatever we spoke about, some mock of some of the things, and some of the work streams within that would be a good starting point.
Yeah, thank you very much. Thank you very much.
Thank you very much.
We'll need a break.
Then you can start. People are waiting now.
Okay.
So you can start. Yeah.
Sure. Good evening, everyone. I am Sapan Pare, co-founder and head of business at Legality. I am audible. I'm assuming I'm audible. Thanks to IBA for giving us this opportunity. We will kind of keep it short because I know the session is slightly extended. So thanks so much. In the industry, Legality is well known for its product on e-signing and digital stamping. We are used by 15 to 16 banks. So I'm glad to see several of our users and proponents as part of this webinar. However, today we are going to talk about our second product on which we've been working for the last 3 years called Consentin. This is a DPDP compliance and privacy platform. We will talk about what it means once we step forward from the legal and the process-oriented steps which EY and CAM spoke about. We will talk about what the tooling can look like, what the structures can look like, all in alignment with what we have heard as part of this session.
Go to the next slide.
Yeah, this one.
Okay. Yeah, okay, it's working. So today, the Consentin platform is undertaking one of the largest implementations of the country. We have Union Bank of India, IFL Finance, Flipkart Finance, Payments, Jana Bank on pilot, Sharp Financial, and IFL Home Finance. This makes Consentin one of the largest external implementations of DPDP compliance project. We are doing 5,000 TB of data under data discovery. We will be managing around 20 crore data principals across our client base, 50 unique databases, and more than 50 lakh monthly cookie website consents. This is the scale at which implementation has started. This is less to demonstrate what we've been doing, but more to demonstrate what peers in the industry are doing. This sort of gives you the insight as to how can you also push internally and benchmark yourself against the peers. And we've had a lot to learn while doing these implementations in collaboration with our consulting and legal partners. And we've also been able to share unique insights in how DPDP framework is shaping up in the country. These are just some pictures from various panels and presentations and kickoff calls. Okay, so a variation of this you've seen in the previous presentations. This is the tooling aspect, not specifically on the process part, but this is the tooling aspect of the DPDP compliance journey. As step one, once gap assessment is completed, it was mentioned in the last presentation that there's data discovery as well, data mapping as well. And then we come to the consent part. Now you will notice consent is one part of it. There are so many aspects enveloping consent. So we need to take care of that also, and the steps towards managing the consent well go through doing all the other implementations as well. So third, we'll cover what all tools can achieve. In the next few slides, we'll show some screenshots, and if we have time, we can go through the demo as well. So consent is one part of the puzzle. Layering the consent is third-party risk management, data retention management, which is very, very key given the size of data we are managing. Privacy assessment, so not just one-time gap assessment, but on a very regular basis, checking your posture on privacy. This becomes equally important, and you can't have 50 people team to manage each of these aspects. You need small, effective teams, and that can be achieved by managing and implementing specific tools for it. And lastly, we have personal data breach management. I think we just saw the previous panelists talk about breach management. So this also has to be activated as well. Now, this is the key slide. This probably answers some of the questions we've been listening to. What is required is a central consent management platform for each bank. We practically cannot have an LOS with its independent consent manager a CRM with its independent consent manager, and banks at your scale have multiple LOSs and multiple CRMs and multiple marketing systems. So you cannot have everybody use their own consent systems, which is the case today. That can't go on after May of 2027. You need a central consent management system which integrates into all your upstream systems, whether it's website, net banking, branch, business correspondent, third-party channels. Even to that extent, we have seen requirements of ATM integration, right? The feasibility of which we have to see, but that is also where PII collection happens. And of course, the core banking and its CRMs. The CRM aspect of the core banking is what is critical for consent management, not the core banking itself, which typically we don't want to touch when it comes to integrations. So these are the upstream collection points of PII. It may differ slightly for different banks, or it may be slightly lesser for some banks. All of this logs consent into a central consent management system, and all of this is used by all your downstream systems. So this could be your marketing system, this could be your servicing system, this could be your call centers, this could be analytics system, and even fraud prevention systems, right? Here I'm not talking about where consent is mandatory or optional, but this is purely from an integration point of view. This is at a very, very, very high level, how integration needs to be managed at a central level. It was mentioned that data discovery will be key, and that is absolutely true. Data discovery works on your structured, unstructured data. The third type of data on which data discovery works is endpoint, which is your laptops. This will protect you not only in terms of privacy, but also in terms of security. So if you find data on laptops for teams where they should not have PII data, or they have had PII data and there is no such requirement going forward, then you should be able to identify and also isolate these systems. This is where data discovery becomes important across different points, including your databases as well. It may be the case that you were collecting voter IDs 30 years ago, but today that is not required from any particular purpose. Even from KYC and mandatory RBI requirements, you don't require voter ID. Hypothetically, I'm just giving an example. You should be able to identify that these IDs can be purged. That reduces your security security leak surface, and that is where data discovery shines, right? It tells you what PII data you have, and then it gives you actionable insights into what can be done. Now, given the size of banks, of course, this is a long activity. It can't be done in 3 months. It will need 6 to 12 months to operationalize, given that there are 200, 300 applications and systems to scan. So this we need to keep in mind, that the earlier you start, the better it is. For some banks, some of these processes are already in place, so that's great. And a system like Consentin can integrate into those data discovery systems, where those PIs can be then used for consent collection as well, right? Those PI headers, I don't mean the actual PI, but I mean the PI headers in the sense of whether a phone number is being captured or Aadhaar number is being captured. Those headers can be used for consent collection and notice creation. Second, of course, data discovery classifies your PI. So it can tell you have 2 million voter ID records, 20 million Aadhaar records, and that's how you then understand how much sensitive data you are carrying at a central level. Okay, so this is data mapping across your different systems. When you're starting your journey for the first time, your team will identify data and data flows and create data flow diagrams. All of that can be uploaded in a system like Consentin, where visually you can see how the data is flowing. And this then serves two purposes. Basis this data flow, you can create your consent notice, because effectively consent notice is giving a notice to your customer, a potential customer, on how the data is going to be used. So the data flow diagram, or data lineage, as some people like to call it, can be used to create consent notice. And all aspects of data lineage do not have to be shown to the customer. I'll just give you an example in the next slide. Yeah, it's people can zoom in on their screens. but we'll show a demo and it might be clearer there. The lineage which we saw 2 slides ago is used to create a very simple, effective, and very intuitive consent notice. And this notice can be for any purpose. It can be for mandatory purposes as well, or for legitimate use, or for where you need a proactive consent from the customer. A very simple notice can be created like this. What is critical for notice to have, and which we fully support, is multiple language, which you need 22 languages plus English. That makes it 23 languages. The notice needs to be purpose specific, and the PII categories need to be part of it. We'll look at that in the demo. Another aspect of DPDP is third-party contract review. Consentin supports reviewing all your contracts through automated methods. It can identify DPDP gaps. It can identify RBI gaps. For example, RBI has detailed outsourcing norms. It can identify these gaps to ensure that you're protected not only from DPDP privacy perspective, but security perspective, and RBI guidelines can also be automated and flagged. This just eases your life and ensures that at a central DPO or a CISO level, you have the comfort that things have moved as per the frameworks that are in place. So tools have to align to frameworks. It's not that the policy itself can help you reach the final destination. One small aspect of consent collection is also cookie consent. So all websites of banks will have to have cookie consent banners. RBI website today already has a cookie consent banner. So if somebody is curious to see the implementation of it, you can see RBI's website with cookie banner, and that's mandatory under DPDP. Second part of it is valid parental consent. Not a very big issue for the banking sector, but a small amount of PII you may be collecting, whether it's nominee details or child owned accounts or child operated accounts, will need valid parental consent. So DigiLocker integration is inbuilt in legality Consentin, which can verify the identity and the age of the parent. So this becomes important for those products. And here is the key part, which is rights management. We need to ensure that all consents collected, and it's not only about consents that are collected, it's also about legitimate use. I think we were covering in the previous presentations. Even legitimate use and users under legitimate use have to have rights under it, and they can be the request can be raised to erase it, or grievance can be raised on it, or nomination can happen. So some of the rights are applicable even for legitimate use, and therefore you need to have data principal rights management across your customer base. This is very important to ensure that customers don't raise grievances if some automated flows are built in terms of access rights. Customers then don't raise grievances to get that information. That just ensures that less internal discussion and communication is required at the high volumes the banks are going to see in terms of rights requests. Powerful analytics and reporting dashboards are required. Legality Consentin supports those. Automating your privacy and InfoSec assessments. Every year, significant data fiduciaries, which would be all large banks at the minimum, have to undertake DPIs. So you can use Legality Consentin not only for consent collection, but also for such privacy and InfoSec assessments. In order to make it easy for banks, we have created a dashboard not only for privacy assessments, but also for InfoSec assessments. So effectively, this is a GRC tool where you can send your vendor InfoSec assessment sheets, ensure they upload the evidences, their evidence are recorded, risks are identified, and even remediated. So complete GRC tool is also inbuilt into the solution, because after all, DPDP is not only about collecting consent, it's also about maximizing privacy frameworks and maximizing security frameworks, which can happen only through a comprehensive solution like Consentin. This is the last piece of the DPDP puzzle, where we have to manage data breaches and automate notifications. If unfortunately there is a particular incident, you have a timeline which is as soon as possible. You have to inform the data principals, you have to inform DPB board, you have to inform certain and RBI. It's possible that you may have other authorities you need to inform, of course, your board and other regulators, if it's insurance data or NHP for that matter. So keeping that in mind, some amount of automation and integration is required. However, this has to be a system which is driven more through a process rather than automation, because you can't automate sending notifications. It can lead to cascading effects. So some amount of lack of automation is required in a flow like this.
How do you identify breach? I mean, your system.
So this needs to be integrated with your SIEM system, because that system is actually integrated across the surface area of the bank, right? So it needs to be integrated with other systems. It can't work in isolation. To that extent, this needs to be integrated even with your DLPs. So it works together as a whole to solve the DPDP framework. I think this is what we were, a lot of questions have come on the chat on the three concepts. What is a registered consent manager and what is this NEGD shortlist for code for consent? That has also been mentioned. And there was, I think, a question also, if banks have to wait for the results of the NEGD shortlist. So we just wanted to demystify this a bit. It was not supremely clear in the public domain on what these terms mean. The NEGD shortlist for code for consent challenge, the idea behind the challenge was to create a framework for MSMEs to adopt something which is open source. So the end goal is to whoever sort of gets finalized as number 1 and number 2 in the challenge. And this is just related to consent. This piece, code for consent challenge, naturally is only for consent. This is to open source the code which can be used by any entity, but mostly targeted towards MSMEs. So that needs to be kept in mind. It does not mean that the government is approving something for use by large banks, because the banks do not require only consent. They require privacy framework, not just consent. So that is a critical piece. The second idea is, in itself, the open source system is not does not have a legal backing. The legal backing will come through a registered consent manager, which the DPB board, once constituted, will shortlist and approve. So the shortlist for code for consent is not the same as registered consent manager. These are two very different concepts. The third thing is on the legal status. The winner is a winner of the national coding competition. This is not a country's consent manager. That's not what it is. And the evaluation metric, at least in the first phase, was Figma prototypes was used as an evaluation metric for code for consent. Naturally, not something what a registered consent manager will be. A registered consent manager will be evaluated very deeply by the Data Protection Board. And of course, time will tell what that framework will look like. What you need to think about as an actionable insight is to put in place a consent platform, which is the rightmost column we are looking at. And as the previous presenter was mentioning, the consent platform should, at the minimum, comply with the NEGD code for consent framework, right? It needs to comply with that framework. It does not have to be a participant. It does not have to be the winner, because none of that actually means that is going to solve your problem. The consent platform should, at the minimum, comply with the NEGD framework in place, because that's a good soft guidance. And of course, it needs to do 20 other things, which we've seen in the previous slides, which is about handling breach management to data discovery, figure out your retention guidelines. That's what a complete consent platform needs to do. And that is what will solve your obligation under the DPDP Act. How much time do we have? Because we have one interesting flow we want to cover. Yeah, 5 minutes. Okay. We have one interesting flow to cover, and we have a small demo as well. I think we should be able to do it in 5 to 7 minutes. So one question that kept coming here is how physical flows will work in branches. Of course, all banks put together have 1 million branches in the country today. Most of the flows which will get impacted are the physical flows. So we have solutioned some physical journeys, and I'll keep it a bit short. and we can talk about it at some other forum in detail. The very ideal thing, if the customer literacy supports, is collecting consents digitally. Even if the form is being filled physically, you can collect the consent digitally. This can happen if you just see points number 3, 4, 5 on your top right. You can send the consent request through WhatsApp, SMS, IVR. Imagine the customer is in branch in front of you. Whether the customer has filled a digital form or a physical form, you can request through a WhatsApp, SMS, or IVR. Imagine a UPI request that is sent to somebody and they pay it at the branch. Similarly, it can be a request on WhatsApp, SMS, IVR to give consent. So this is one digital method of doing it. And I know several of you will not find this applicable for maybe the kind of customers you face on your branch. So we have come up with a physical journey as well, where consents can be logged. Imagine somebody is coming and filling a form. The form is an account opening form. We need to create a new section in the form, and of course, with the help of legal consultants and your team and us, we put together, we can come with the version of the form where notice in compliance with DPDP Act is put in, just 4 or 5 lines there. Consent is taken manually as they give other consents and other declarations in the form. This form is anyways then scanned and made part of CBS, and a central team then verifies the details of the form. In addition to all the other items which the central team is verifying and the branch agent is entering into the CBS system, one additional item would be whether they have given consent for data processing and whether they have given consent for marketing. Right? These can be, and as the framework develops, these can be 2-3 consents that are logged by the branch agent and verified against the physical form by the central team. Your team already does it, so this is minimal change in their activity. Once it's approved, a CIF ID is generated, and once a CIF ID is generated, the consent is logged on the consent in application through an API call, and this then becomes the central source of truth. The customer now can, either through physical mode or through a digital mobile app, can go and withdraw the consent for optional purposes, or can nominate and raise grievance against the mandatory purposes. So this kind of balances legal requirements, at the same time ensures that across 1 million branches, the workflows that are built there since a very long time do not break. Right? We can now just take 2 minutes to show some working demos of the product.
Hi everyone. So we actually have a detailed presentation with all the solutions that were discussed in the previous meetings, but I don't think we have the time for that. I'm just going to show a very quick demo. 1 second. So this is just maybe a couple of customer journeys that can actually happen either digitally or physically, like Sapan was saying. We'll keep it limited to a digital, for example, gold loan journey that could possibly be there on a website, for example. If the customer comes to your website, asks to fill the application, let's say they are giving you their PII here and email address, mobile number. Now, of course, the data has not been processed till now. The idea is to take consent right here at this stage before processing this data. So a legal notice in this format needs to be presented to the customer, which is of course needed in all the 22 languages plus English, 22 scheduled languages. It needs to have purposes. So we have discussed itemized, bundled purposes, individual descriptions. The idea is, of course, from at least our side to help you be able to configure anything that you require along with your consultancy partners. Here we have presented purposes which can be, for example, one is a mandatory purpose, another is optional purpose. If you see now, I can show this to you in another language, for example, Hindi. This is the purposes change along with the complete notice changes. It remains, like downloadable, and you can of course configure this as the default language. It will work the same way. So, and these are expert translations. This is not just AI translations, by the way. Some of these languages, AI will not work very well with Bodo, for example, Methli. So this is expert translations along with AI translations that are pre-configured within the product. Now, let's say as a customer, I want to give my consent for both of these purposes or just one of these purposes. I am allowed to do that as per what the requirement is under DPDP. I can, of course, choose not to give my consent, in which case I can press cancel here, right? So let's say I've given my consent for both these purposes. I can move ahead and now give my Aadhaar, PAN, customer photo, complete this journey of uh, whatever your process is for gold valuation. I can complete this journey, valuator email, valuator mobile number, and so on and so forth. This is a bit long. The whole flow ends at a e-sign stage, but you get the idea that however your flow works, digitally or physically, at the very beginning, before processing any data, consent has been taken for the purposes that you want to add to the notice. Now, what happens at the back end? Let me show this to you very quickly. This is the business enterprise dashboard.
Check if people can hear you clearly.
I hope I'm audible, right? Yes. Okay. So this is the business and this is the dashboard essentially. Let me come to this. What you see here as the first stage, this is what is called lineage or data mapping. I'll just come to this in a second. Just coming to that record that we have generated now, if you see final gold loan demo, this is the profile name. Not getting into all of these details here, but essentially this is the dashboard where consents are being collected across all your digital and physical touch points. It can be, of course, further divided into entity-wise, team-wise, business enterprise, subsidiaries, RBAC controls can be enabled here. But yeah, the idea is that this is the dashboard for the DPO's team and the other teams to see all the consents wherever they are coming from, all of your touch points. These are consent logs that get created. So individual purposes will have individual consent logs. This is the auditable and immutable record of consent. Now, let me just open this for a second. Now, this has not really been prescribed in the rules or the act. However, it is very much clear that this needs to be for the format that needs to be followed for consent collection, regardless of digital or physical consent collection. In the BRD, they have, the ministry has specified this. In fact, they have specified this time and again before and after that as well. This comes from the account aggregator framework. Like we have discussed account aggregator frameworks already here. This bit that you see here, not getting into all the granular details, but this is essentially the code of the consent. And this is a hex code. This is another hex code. It's any tampering or any changes in this document and the hex code would change here. This should, at the very minimum, capture, for example, your purposes. It doesn't need to capture any PII. This is just for our demos. It can only be, for example, it can just be created against a temp ID, against an application number, against a customer ID, SIF ID, and any unique identifier, and has nothing to do with any PII that you see, names or email or mobile number. That is just for our demos internally. Now, all the details are captured here along with the data mapping per individual, right? Okay. I'm just going to cover maybe one more thing. This is very quickly all of your requests for deletion, updation, erasure, etc. can also be accessed from this dashboard. If, for example, and eventually they are triggered via a website by the customer, maybe on your website or maybe on the app, you can leave QR codes in the branch, but eventually it would come on a dashboard like this, again, for the bank to see and have about 90 days to respond to any request that comes in. If you, for example, as per your retention policies, go ahead and approve deletion. It's a very easy thing to say this, but we'll of course integrate with all of the third parties. All the third parties would be notified that data needs to be erased. They would be emailed that the SPOX would be emailed that this particular customer ID's data needs to be erased. And there can be multiple other workflows around ensuring that the liability doesn't come on the bank for any kind of erasure request that is not adhered to by any kind of data processor. Now, just want to cover this lineage for a second because this is very interesting to see it like this. 1 second. We've discussed what data mapping is time and again in this session today, but let's say this is a profile for a banking use case, maybe like something like a super app, for example. This is just a suggestion, also just, I mean, it's at best an illustration. A bank can choose to do it however they want to do it, as granular or as general as they want to do it. However, these are purposes. These are processing activities. These are systems where these processing activities are happening, and data categories that can be found across different systems. This kind of a lineage or data mapping would be needed before you start collecting consent for new customers, ideally sooner than the deadline date. And this will also be needed to send out these one-time notices or any kind of notices out to legacy customers, because eventually when the exercise of rights happen or any kind of withdrawal request comes in, for example, you could never be able to delete data for KYC. It will be as per retention policy. However, you can maybe withdraw data, your consent, or you can ask for deletion request for marketing and promotions, in which case it would only be deleted or the processing would only stop in systems that are related to marketing and promotions, which could be these, let's say, these third-party systems that you see on your screen here. But nothing would be touched for the purposes with respect to KYC, credit check, or something related to the first purpose, which could be customer onboarding, right? So this is the idea for having this data mapping prepared at a channel acquisition level. It doesn't need to be central, decentral. Don't have to think on those lines. It's a channel acquisition level, whatever channel it might be. And once this is live, it takes about maybe a couple of days to integrate SDKs across digital channels, have custom consent APIs integrated to core banking systems as well as systems like Finacle, etc., where physical data can eventually turn into digital consent artifacts. And we have solutions like maybe around 25-30 different solutions on how consent collection can happen once this data mapping is prepared on the platform, on the product. Anything else, Apan, you want to cover?
I think
I've taken too much time already.
No, thank you so much once again, IBA. And we will just move to the next part.
Can we close now?
Yeah.
Okay.
Yeah. Thank you so
much.
much.
Thank you very much. Respected Chief Executive Officer of the IBA, Mr. Atul Kumar Goyal, my Lanesh partner, and my dear colleagues. Today's, first of all, I sincerely apologize for the audio show which was in the start of our webinar. This webinar is the first step towards a very long journey. We propose to hold such a more webinar with more intensity and with a more focused approach on the basis of the query raised in the chat box. The query raised by you people in the chat box will be considered while revising or while designing next webinar. So thereafter, I will thank all of you to come and join this webinar with the shortest notice, and especially people in Mumbai, time is the currency. So in Mumbai, they have afforded spare their time, valuable time to come here and participate in Mr. Rajesh Prasad sir and Mr. John sir, who has come all the way to Delhi to join us. A special thank you very much, and thank you very much to all of you, to my staff member and my team member who facilitated to happening of this webinar. So thank you very much. We hope we will meet soon in next webinar. Thank you. I will expect some suggestions from your side to organize next webinar more smoothly and more purposefully.
We will share all the presentation. There is a report of the, we will share all the presentation.
Thank you. Thank you very much.
Thank you. Thank you so much.